Wow, 30 days to 30 minutes. That's some empowerment right there. Rohith, you guys are transforming trust accounting. Tell us, bust it out.
Yeah, so Managed is the world's first housing operating system. We actually connect renters, owners, tradies, and real estate agents. So what used to take 30 days, and I'm not trying to beat you 30 days to 30 minutes, but we do 30 days to 30 seconds for rental payments. So we basically help get money from the renter, pay the agency net amount in an owner's offset account, could save them thousands of dollars by the end of their loan, but we stop trust accounting theft, which is a massive issue. I think 270,000 was stolen from consumers yesterday down in Perth, or over in Perth. So we basically help facilitate faster payments.
So 30 days to 30 minutes and then 30 days to 30 seconds.
Yeah.
Catherine, tell us about
3
that.
seconds.
No pressure, no pressure at all.
So Brighte is, we're on a mission to make energy equipment affordable and accessible for everyone. And so how we do that is we make it affordable we've created lending products and they're available at the point of sale through a network we have of about 3,000 tradies effectively that sell and install solar, batteries, EV chargers. So we also not only provide their customers a way to pay for energy equipment, but we also provide them working capital solutions. We make it accessible by removing friction in the supply chain, and we do that by working with government, different corporate partners to enable their customers to access energy equipment faster.
Cool. So all three of you guys your PropTechs are interacting with the legacy, or the financial system. If you had a magic wand, how would you change the system right now so that it was working better with your PropTech? Rohith, do you want to? Or you're just surpassing it, going around it altogether? Or?
Yeah, I mean, like our biggest competitors are really Macquarie and CBA because they hold the largest amount of trust bank accounts in the country. So with our platform, we use a payment gateway. The benefit is obviously, the interest is actually benefiting your property investors. Again, theft and fraud occur when you have a mum and dad real estate agent managing that money manually. It also costs them between $30,000 to $150,000 annually to pay that. So we've got case studies where we've done it for 89% more cost effective for them to operate, faster, more secure. And the benefit is as well, like consumers at home benefit. So renters have more payment options, they're free, they're fast. Property investors benefit because they get money in their offset account, and real estate agents don't need to touch money anymore, which is benefit for all of us because it still pays them their fee, but it allows everyone else to benefit. And tradies also get paid instantly.
Yeah, that's awesome. So, Katherine, what would you do to wave a magic wand and work more closely or better with the existing finance sector?
So we're coming up to 10 years.
Well done. Okay, well then you are part of the existing financial sector.
So I think we're on a different part of our journey, really. Maybe when we started, we felt that we had competitors. I think we feel like we've really carved a niche, and what our capabilities are, we actually think we can use those to leverage other participants in the ecosystem. So potentially competitors are now partners. An example is CommBank. So we're helping them. We're partnering with them and enabling their customers to use our network of energy equipment sellers and installers, and so they're effectively able to distribute and enable their customers to buy solar and batteries and EV chargers. So that's one thing. We're on a partnership phase and looking at the ecosystem. One of the new values that we have is a win for all, and so how we can create a win for all by partnering and enabling. In the existing financial system, there are a lot of regulations and changes that have been launched around sustainability reporting and climate-related disclosures. And so we're really happy with actually those regulatory changes, and we have started to see them come into effect this year. So Group 1, Group 2, Group 3, they'll start to be rolled out for most companies over the next couple of years. And what's really interesting is from next year, we'll start to see Scope 3 emissions reporting come into play in a limited way. for the Group 1 companies. And so what that looks like is if you're an existing home loan lender, you'll start to have to see through the carbon intensity of your home loan customers. And so we're starting to have a whole new group of constituents and companies entering the market and starting to care about households and properties and the carbon intensity of those businesses. So I think we're actually entering a really interesting space where a lot more people are going to be motivated to support households and property owners to actually decarbonise their buildings.
I think you're right, but I'm really curious to understand as we move into this new space where we've come out of COVID, it's been extraordinarily hard to find a tradie to get them to do anything, and now we're also going to all have to upgrade our homes for energy efficiency to improve that too. It's going to be a challenging time.
Oh, it's 100%. It's one of the biggest challenges we have at the moment. The government announced a battery subsidy at the start of July. And so if you go to a tradie today and say you want to buy a battery, we're hearing it's likely February will be the earliest you'll be able to get that installed. There were product constraints, but the biggest constraint is actually the Class 2 electricians. And so they have restrictions on how many batteries and solar systems they can install in a day. And so they're constrained. It's a 4-year lag that we have now to fill the pipeline with these people.
Yeah, get in early if you're wanting to upgrade. Adam, tell us what magic wand would you wave, because you're bringing transparency to the sector. So how is that working?
Yeah, I think actually the magic wand would probably be for the existing ecosystem, being lenders, brokers, aggregators, seeing the opportunity that sits in within our platform and sort of bringing transparency to homeowners. One of the interesting things that we've learned is that we're probably targeting the most profitable product in Australia. I mean, we've got, I think it was the most valuable bank in the world is in Australia, and Australia's a very small marketplace. That doesn't make sense. It means that someone's getting ripped off in that journey. It's not the shareholders, it's not the bank, it's probably the end consumer being the mortgage holder. And so how that exists or how that happens is that over time there's what's called the loyalty tax in home loans. So the longer you're with the lender, factually, the higher your interest rate is going to be. And so I think there's an opportunity within that to look after existing customers. There's probably an ethical responsibility, I think, that the government should start calling on the major banks to say, hey, look, you can't be charging someone 1.5% interest over what the rest of the market is or what you're offering new customers. I mean, we've seen in our platform savings of 2.5% that we've reduced an existing home loan for without switching lenders, so staying with the same bank. One customer we saved $35,000 annually in interest off their home loan without having to switch lenders. Like, it's just, those numbers are, like, some of those numbers are life-changing for consumers when there's this cost of living crisis. So probably one thing I would change would be some regulation or some work the government can do to force lenders to look after existing customers more and bring transparency to it. So you log into your banking app, what's the first thing you see? You see your account number and your balance. Why don't you see your interest rate? There's good reason they don't show you your interest rate, because they don't want you to know what your interest rate is. Now, this puts us as a platform in a very polarising position because it's the most profitable product, home loans. Extremely profitable when consumers don't know what they're being charged or what they can get in the market. And then the second thing, I think, is embracing technology to automate processes. So our newest product that we're in beta with at the moment, Instant Apply, is automating the application process using data to cut out providing documentation to take it from 30 days to 30 minutes. I mean, there's no reason you can't do a home loan in 10 minutes. But then you've got an ecosystem that goes, well, what are the flow-on effects if that happens? So if you can do a home loan in 10 minutes, what's going to stop a consumer switching and refinancing every 6 months? And if they're doing that, they're going to get the next best rate in the market. What's the flow-on impact of that? What does that mean to backbook repricing, where lenders are making all this money off of customers that don't realise they're getting overcharged, and when they go to move, it's too hard, so they give up and go, I don't want to do that. So there's a huge opportunity that I think when you start to get a bit of a market shift and a groundswell of new lenders doing it, and you get enough lenders that take that step and approach it, then you'll see the market move. But what we're learning is that it's a polarising position to be in, to push for transparency and liquidity in mortgages. You should be able to shift or get a mortgage quickly. It's a really interesting space to be in. So opportunity for challenger banks to accept it. Probably some restrictions in the ecosystem with how quickly they can move. But that's probably my magic wand, is transparency and then adopting technology to switch.
Awesome. We were talking about, we're looking at refinancing, and when my mortgage broker sent me through the list of questions that I needed to answer, I actually had to put my head between my knees and hyperventilate a bit. I've never seen. I felt like I was studying for a PhD. Anyway, look, everywhere you turn at the moment, and I know we've only got 14 minutes to talk about this, but everywhere you turn at the moment, someone's talking about AI, and there's a lot of AI conversations happening in the real estate and the PropTech space. How is AI showing up in your tech, if it is or isn't, and where do you see it going next, Rohith?
Yeah, I mean, look, in our space, it's all about automation to reduce it. I mean, we're tracking towards 5 billion in transactions before the end of the year. We've done a partnership with Amazon as like a very cool, approach to how we can redefine how people help facilitate a better relationship with their property investors and renters. I don't know if there's anything, like as you said, AI is like the hot topic, and that's kind of what most people only want to talk about. They kind of forget that there's other things that could help them operate more efficiently. One of the key things is obviously, that within our sector, like PropTech and FinTech, they're both highly regulated. Which is good, consumers benefit. So there are certain things that we would say you can implement AI, but then you have federal regulators and then you got state bodies like Fair Tradings and Consumer Affairs. Sometimes they just need to work together a little bit better. And that's something that we see, even though you can go and roll out new features, if government and regulators are slower to help you adopt, then it slows innovation within your whole sector.
Katherine, what about you?
I've got a few examples actually, but I will say that I wish I was starting a business today, not 10 years ago, because I would have started it totally differently. And the stories I'm hearing about people that are building businesses with 5 million ARR in like 5 months with 3 people are just mind-blowing. So it's, I think it's a really exciting world. We, in 2019, introduced our first AI worker at Brighte. And it was called Mel, Machine Engine Learning. And so Mel was given a specific task. And so what we did was we used information that we had on humans' credit decisioning, loan applications that had come in that weren't auto-decisioned, and all the information they had to manually decision. So we turned it on as a pilot, we ran that, and then we looked at the accuracy of parallel humans' decisioning, and we found Mel was very accurate, so we turned Mel on. So we've had experience since then with the AI concept of a worker, and we felt it was better to humanise Mel as well, and I know that's a big trend that's happening now. I really like the memo that Toby Lutke from Shopify sent around to his company, and that's something we've really taken to heart and we're trying to embed in the organisation, so much so that our annual company OKRs, we have 5 objectives, and so one of them at the top level is around AI, and so the key results that we have are around training our people. Yes, you can go in, like AI is still pretty new, but I actually think we can make our team the best and most knowledgeable in AI. We don't need to go and hire a new workforce, so really investing and thinking about how we do that. The second is definitely linked to operating leverage and cost to income ratio, and so looking, we're going to grow revenue this year by about 40%, and I've changed the concept of headcount to an employee envelope, like OPEX envelope, and dollars will stay the same this year whilst we grow revenue. And so really clear metrics that we're linking to this. And then the third one is around revenue that we can create for our customers. So, greater experience, greater revenue that we can create for our customers. And so those 3 headlines, we've got very specific activities that we're thinking through and measuring around how we do that. So, things like every time we hire, or someone puts up a role, like absolutely going back and saying, can we automate this? Can we use AI? Why do we need to hire? But yeah, I really think it has to be that front of mind. Yeah,
integrated into everything you do, not just a silo that sits off to the side.
Not ChatGPT or just Copilot and everyone's got a license for it. Yeah, that's not where you need to be.
Adam, how's it playing out for you?
Yeah, ours is very much in the process automation as well. So we've got AI agents that actually do the process automation for mortgage brokers for getting their customers cheaper rates. So that's automated across 26, 27 lenders, and to the point where it makes its own decision, and then we've got agents that review the agents. So we do that for quality controls. And then what's really interesting is that one, you can just deploy them, and then you can they'll learn and they'll make changes, and they'll actually make changes on the fly, and then they'll review each other's work. So it's quite interesting when you start to look at the possibilities of it. It's scary if you don't put tight constraints around it, because in some of our testing they can just go off and do weird stuff, and you're like, I don't know how that output or that result came, and then you look back and then it makes sense in the decisions that it's made. But you really have to, I think our approach has been very much test, learn, refine. And then, like you said, you pilot it, you look at it, you review it, and then you start to let them go. But ours will look at trusted, verified data on the consumers, then actually go and compare that to the market, then go contact the bank, actually get a cheaper interest rate. We'll make a decision whether that's good or not, compare it, and then go back again for a second time, and then accept that or decline that result from the lender, and then present the outcomes back to the broker and the customer, and all of that's automated. So our extension into that is now doing everything that a mortgage broker does and their offshore teams. That whole process can be automated. So we're looking at actually moving from just a rate reduction AI into actually loan applications AI. So I think the future for a lot of businesses that engage AI is that you're going to see, I think the process automation is a really interesting one for us. You'll see a shift from everyone went building teams in Australia to then offshoring, and offshoring was a really big movement. I think you'll see offshoring disappear, and that'll be shifting to agents.
Do you see that the work that you're doing could lead to a point where that we won't need a mortgage broker anymore because it would all be AI, or is it going to be an AI-enabled mortgage broker?
I get this question all the time, and I think my answer stays pretty much the same. There's nothing a broker or financial planner or lawyer or anyone can do that an AI actually can't do now if you're focused and you trained it, right? So that's the harsh reality. Technology is moving so quickly. Where I don't feel threatened by technology is that we're humans and we adapt slowly, and our brains adapt very, very slowly, to the sense of we still want connection. We still want to know that I need validation from someone that understands contextually my situation and everything that it's output, and go, yes, that's actually right. So I think the role of a broker is going to change a lot. I think the role of a lot of industry is going to change. The role of industry will need to be that trusted advisor and that trusted connection that says, okay, yes, this has actually come up with the right result and I would do this. Or what other things do I need to understand about your needs to make sure that the output of what the agent has given is actually correct. So they need to know very much what good looks like and what bad looks like.
Awesome. Catherine, I just want to ask you one small question without notice, because we've heard that we've gone from 30 days to 30 minutes and 30 days to 30 seconds. But how much, if a homeowner decided to use your product, what is the saving or the benefit to them in terms of running cost, or how do you measure that? Like what?
So we looked at solar historically, and so households on average save about $150 a month. And then batteries, it's really a bit different. It's hard at the moment to fully understand because people are oversizing, they're generating excess energy and selling it to the grid, so they're becoming energy generators, not just consumers. Yeah, but $150 a month for solar is what we've used.
That's a good saving across the year. Yep. So look, just to wrap up, because I'm mindful of the time, but apart from AI, what is the tech or the trends that you see with your crystal balls coming down the path that that you think are going to influence this sort of PropTech, FinTech sector next? Rohith, do you want to go?
I'd love a crystal ball. I heard Dom apparently in stage one has a crystal ball, so reach out to him. I think regulation, to be honest, like everyone within this whole fintech space is going to say that, like the biggest work is what you can do to innovate, but how can government help you? How can you work with regulators to ensure that whatever you're building helps consumers, whether it is transparency, whether it's speed to market. You know, I think I'd love to see the government implementing MPP. I know there's whole bunch of people within the payment sector who'd like to see that. But that, like, you know, we see ourselves more within the payment space. So faster, more secure payments, cross-border payments as well would be nice, especially in our sector, which is real estate. The new tranche 2 money laundering, AML, is coming through. It's amazing. You can talk to like federal regulators, and they say that they want to stop fraud and money laundering, and then you've got agents within state regulators who are fining agents for accepting cash. Sorry, for not accepting cash. So they say you need to accept cash. It's like, well, hang on, you can't tell us that you want security, but then you also want people to accept cash payments. As long as they allow fast bank transfer and it's free. But to then tell a real estate agent that we are enforcing you at a state level to accept cash, but then you've got government regulators who say no, you should be stopping cash payments.
So some harmonisation across regulation.
Correct. Yeah. Just removing red tape and bureaucracy and allowing one source of truth for everyone to basically apply their innovative solution towards.
Cool. Katherine, what do you see coming?
I think open data CDR and how it's used in lending and energy is going to have really interesting impacts in uptake and awareness, transparency, and then sustainable reporting, climate reporting, and the new entrants that's going to bring into the market. And then the final one is property owners becoming more active in the energy assets and how that's going to generate a revenue stream for them, and the different types of models that's going to create.
That empowerment piece around property is quite phenomenal, because we are on the cusp of residential property being a fixed dead asset that you own and, you know, raise your family in and then sell it for the next thing, to it being almost like its own little business unit where it has incomings as well as outgoings in the future that isn't just interest and revenue. Well, they're going to start earning revenue, hopefully.
Yeah, we have the potential for Australian households to be the crux of generation capacity in Australia. So 75% of generation will be aged by like 2032. And if households uptake and property owners uptake batteries and generation, like we could start to be the big owners of the generation capacity in the country. And that's crazy and has huge consequence.
It does. So, Adam, what do you see? Because one of the things that I see is that we've got this need for greater environmental property, a residential property. The best way to do that is to actually start building off-site, but we actually don't really have financial products that support that in terms of new builds. So, what techs and trends do you see coming through? Yeah,
I think it's going to be quality of data and sensitive data. So I think the quality of data that will unlock opportunities for consumers is going to be extremely important, more so important than what it is now. And when you look at data, if you then take that a little bit to the adjacencies, you start looking at content and what's produced and what data is available on, just more broadly. Because at the moment what you've got the situation where AI is now producing more content than humans, which is now using that to inform its own decisions. And you've almost got this really weird loop where it's starting to sort of become a little bit detached from what is authentic. So I think a crystal ball moving forward is that there'll be this unlock where the value of each consumer's data and what they can actually understand as value of their data to unlock benefits for them, whether it be property benefits or lending benefits, and the ability to share that data. CDR is a great start, and we're a big user of CDR data, but then actually extending that with the ability to go with ID, with property, with ATO, with every data source that's linked to that consumer. I think it should be the consumer's right to own that data, to provide it and then recall it. And I think that's going to be this really interesting inflection point where technology capability is there to do it now, the understanding that the data is valuable and can unlock those products, and then the products will catch up to it. And you have this really interesting inflection point where consumers can just do whatever they want with their data to benefit themselves. And I think that will fundamentally shift how products are manufactured, how products are distributed, and how consumers interact with their products.
It's going to be a really interesting future when one of the assets that we all have up our sleeves to negotiate with is actually the data that we know about ourselves, and I think that will be quite fundamental in how we manage our finances and our property ownership. We're coming up to time, so I just wanted to thank our panel, Katherine, Rohith and Adam. Thank you so much, and hope everyone's now convinced that PropTech and FinTech are deeply integrated. So thank you very much for your time.
Thanks, Pat.